Roughly 1.44 billion in fresh institutional capital has parked itself inside XRP this stretch, and almost every holder I talk to has no idea it happened. That figure is the cumulative total that has flowed into spot XRP ETF exchange traded funds, the ETFs, which are simply regulated funds letting large institutions buy XRP through an ordinary brokerage account. Picture the split. Your screen reads extreme fear at $1.13, and the desk capital says the exact opposite, quietly accumulating. By the end, I will name who is on the other side of your sell, plus the single warning sign that tells you the moment this read stops being true. Let me state the question this whole thing answers and the receipt that it closes. Forget whether XRP rallies. The real issue is this. While retail dumps into the panic, who is buying the bottom from them? And does that change a single decision you make this week? My receipt is the flow data and the on-chain footprint, never a screenshot of some leaked target. I am also holding back on the third piece of evidence until the end of the video, the part that ties the capital to the law, because nobody is connecting those two right now. Let me kill the lazy explanation first, because most people land on it and then stop thinking. The lazy version says we just watched a dead cat bounce. XRP slipped under the $1.14 support, snapped back, and supposedly fades again. A fade cannot explain accumulation. Desks avoid committing 9 and 10 figure sums into an asset they expect to die in a month, and they especially avoid doing it through a regulated wrapper that publicly reports the flows. Panic is the retail emotion. Sustained inflows are a committed decision with a paper trail. Those two readings point in the opposite direction today, and when they split, the capital has historically been the signal and the candle has been the noise. The parts of this cycle where retail was euphoric and overpaying, they show up when sentiment is ugly and the chart is doing the discounting for them. That is the first piece of evidence, and it's concrete. The ETF Capital arrived and refused to leave when the chart fell. If you own XRP, that should reset your read first, because it means $1.13 is the market lag, never its verdict. Every extra unit accumulated during a panic is supply pulled off the float at a level you can call cheap and a desk calls a discount. If that reframe what the chart is actually telling you, a like, subscribe, tap that notification bell, because it helps me keep pulling on this thread for you and more XRP holders. Evidence point number 2 is where this stops being a chart story. RLUSD, Ripple's own dollar-backed stablecoin, which is basically a digital token always pegged to $1 that banks use to settle payments instantly, has climbed to about 1.7 billion in market value. It now ranks the 8th largest among all stablecoins and runs live across more than 40 networks. Ripple did not ship that to win a popularity contest. They built it because every dollar settled through RLUSD travels through their plumbing, and that plumbing rides through the same ledger XRP lives on. So the capital is not merely buying a ticker, it's writing itself into the settlement system XRP powers, which is far harder to unwind than a quick trade. Think about what a stable coin at scale actually requires. To hold the peg, you need reserves, banking partners, audited custody, which means real institutions had to sign real paperwork to let RLUSD exist on their rails. That's not a tweet. That is slow, expensive commitment that only makes sense if firms expect the ledger underneath it to matter for years, not weeks. The ETF Capital is a bet on the price. RLUSD is a bet on the plumbing. And when you see the same camp making both bets at once, that is not a coincidence. That is one thesis expressed twice. So a gut check before an important piece. Are you buying, holding, or quietly trimming at $1.13? Tell me in the comments and tell me why, because the mix of that actually tells me who is positioned and who is about to get shaken out. But obviously, it's not financial advice and only for entertainment. Now, the honest catch, because if I skip it, it's just another hype channel. A surging stablecoin and an inflow figure failed to mechanically lift the token. So you can stack 1.7 billion in RLUSD, 1.44 billion in ETF Capital, and still watch the chart drift sideways for a quarter, because adopting the rails and repricing the asset run on on two separate clocks. And that's the bear case. It is fair. The capital plainly arrived. That part is settled. What remains is what snaps those two clocks into the same gear, and that is evidence point number 3. Point number 3 is the link that nobody draws, and it is why I built this episode. The desks are positioning for a re-rate, a re-rating, which simply means the market abruptly agrees to value XRP as a different category of asset than it does today. A specific mechanism flips on that switch. The framework that classifies XRP as the digital commodity, legally treating it closer to gold than an unregistered stock, converts institutions are testing into institutions are cleared. And that is precisely why the capital landed before the price did. Smart money front runs a legal reclassification. It never waits just for a single candle. The sequence you're watching, rails first, capital second, price last, is exactly the sequence a coming re-rating produces. Like the video, subscribe, tap that notification bell, and hit the hype button if you're on mobile, because I'll walk you through exactly what to do with your XRP as each catalyst lands, the plan instead of the price guessing, because the next one breaks down the floor vote the morning it lands. And don't forget, if you'd like to trade, check out WEEX, my favorite crypto exchange. You can sign up and get a major sign up bonus. Set the three pieces side by side because together they say something none says alone. The ETF inflows prove the desks already bought. RLUSD proves that they're threading XRP's rails into real settlement, and the digital commodity reclassification proves that there's legal trigger that converts both into price. Two of those three are already visible and banked. Only the trigger is still pending. You're not early to a rumor. You're watching the final domino get positioned in real time at the precise moment sentiment screaming at everybody to leave. Now the fair version of how I could be wrong, because you deserve it. This entire read leans on how those inflows continue. If the weekly ETF net flow flips negative and stays there, the desks are unwinding the bet, and the divergence this rests on collapses. Track the weekly net number, not the daily chatter. While capital is net arriving against a flat or falling chart, the gap is your edge. The day it net leaves for 2 weeks straight, the edge is dead and you can respect it. I'm not asking you to marry the thesis. I'm asking you to hold it exactly as long as the receipts hold and drop it the moment they stop printing it. So here is the finding I went hunting for. The capital is not waiting on the price. It's already ruled. And the $1.13 in extreme fear is not the institution's opinion of XRP. It's yours. They're treating your fear as a discount window. The reason that stings is simple. You can be completely correct that XRP re-rates and you still hand the entire re-rate to whoever bought your panic at $1.13 because you read the fear as a verdict instead of an entry. The fear is not the cost of being wrong here. It is the admission price, and the desks moving billions are the ones paying it while you hesitate. Send this to one XRP holder who keeps missing the real signal, and send it to one person who swears XRP is dead, and let them argue with the flows instead of me. If you take one action from this video, it's not buying or selling on my word. It's setting your levels before the headline rather than waiting for after. So you respond to the plan and not the candle. The verdict holds. Institutional capital moved into XRP while the chart bled. The rails are being wired in and only the legal trigger remains. The one development that flips me wrong is the weekly ETF flows turning negative while RLUSD stalls at the same time. And if that lands, I will say it first. You want the floor vote morning read the day that it triggers. Hit the like, subscribe, tap that notification bell, and I'll see you in the next one.